What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 14th, and here's some business and financial news you can finally use. Let's start today with a little bit of a breakdown. If you haven't already noticed, things are changing. At least things are changing when it comes to earnings reports. Though most are beating expectations, early earnings reporters are not crushing estimates like they used to. 22 companies have reported already beating estimates by 11%. Prior quarters in 2021 saw 18% beats on average. In our October 13th market recap, the S&P 500 avoided a 4-session losing streak as it ended slightly in the green yesterday. The Dow literally ended the day flat after being down around 260 points at one point during the day. Both the Fed minutes and the September Consumer Price Index were released Wednesday morning, and we've got the full story later on in this newsletter. In addition, investors are keeping an eye on earnings and the Fed's next move. And if investors are watching out, you can probably guess that we are too. In today's financial tip of the day, don't be afraid. Starting a side hustle or new business can be incredibly isolating. Remember that plenty of people came before you and are successful in doing what you want to do now. So don't be afraid to reach out to those people for help. You might find that many of them are happy to pay it forward by sharing valuable information they've learned along the way. If you're interested in learning ways that you can earn money from home, our team wrote an article on this exact topic over on theminoritymindset.com, and I'll leave a link to it in the description below. Next up, in our first main story of the day, we're going to be talking all about supply and how it's time to open back up. But before we get into all of that, I need you to do me a quick favor and smash that thumbs up button below. Hit that notification bell too. That way YouTube shows our videos to way more money minds around the world. We can keep making videos just like this one. The White House unveiled a plan to hopefully ease delays at major ports on the West Coast. 24/7 service is the plan to keep the Port of Los Angeles open around the clock. The Port of Long Beach outlined a similar plan last month. Together, these two ports account for 40% of the shipping containers entering the US. On October 7th, there were around 60 container ships waiting in open water outside of the two California ports. These will supposedly help ease up supply chain bottlenecks. FedEx, UPS, Walmart, and Home Depot joined the call and will also help expand operational hours. The International Longshore and Warehouse Union said its members will work extra shifts at the ports. Warehouse and freight railroads will also add extra hours to make shipping hubs more efficient. In our second main story, let's talk earnings and how earnings season is officially back. JP Morgan, the first of many big banks, kicked off the earnings season madness. Earnings per share were about $3.74 per share versus the $3 per share estimate. Revenue overall was $30.44 billion versus the $29.8 billion that was expected. Overall, though, the bank had a decent earnings report, beating expectations on the better than expected loan losses. JP Morgan was able to help its case by releasing $2.1 billion in reserves. A large level of mergers and IPOs helped push JP's investment bank to solid levels. On the flip side, Delta Airlines posted a $1.2 billion profit in the third quarter. Another round of federal pandemic aid helped the airline, and holiday bookings are also increasing. Shares of Delta dropped after the company said that high oil prices will lead to a modest loss in the fourth quarter. And finally, BlackRock, the money management company, saw a robust increase, around 23%, in profit during the third quarter. Its revenue grew around 16%, and overall, it beat expectations on the top and bottom line. Actively managed funds represented over 50% of the $75 billion in net new money for BlackRock. That is it for our main two stories of the day today. So let's take a quick break to talk about today's sponsor, Fundrise. Want to invest in real estate but don't want to deal with the headache of tenants? Well, Fundrise makes it super easy and unlocks a brand new world of real estate investing without the headache or upfront capital. You can invest as little as $500 and get exposure to real estate that will pay you in passive income. What's even better is you can invest according to your goals. You'll even get paid on quarterly dividends. You can invest your money into portfolios with dozens of real estate projects across the country, and you may even get the 8.7 to 12.4 annual historical return rate. It's no secret that the wealthy use their money to buy real estate, and with Fundrise, now you can too. If you're not happy with your investment for any reason, Fundrise will even buy it back within the first 90 days. So if you're interested in making a real estate investment with Fundrise and want to learn more about what they're all about, I'll leave a link in the description below on exactly how you can find them. Big shout out to Fundrise for sponsoring this video, but now back to the news. In our next story, I don't know if you've noticed, but living is kind of expensive. Prices of just about everything jumped more than expected last month, with food and energy prices leading the way. The Consumer Price Index, or CPI, across all sectors rose by 0.4%, higher than the 0.3% estimate. Based on a year-over-year comparison, prices are up by around 5.4%, the highest since January of 1991. Not including food and energy costs in the mix, the CPI still went up by 0.2% for the month and 4.1% for the year, on par with the Dow estimate. The Federal Reserve, though, is still pretty unbothered by this. In fact, it's still showing very little concern with the inflation scares, pinning it on supply and demand issues only that will subside in the next coming months. If you're struggling or feel like you may struggle in the future when it comes to paying for your extra guac, we're here to help. So make sure to reach out to us and call 1-800-GUAC. That's 1-800-GUAC. Okay, don't call that number because it's made up. But in all honesty, the struggle is definitely real. Next up in our mind blown, time is money. For literally any product you can think of right now, it is probably experiencing some kind of shortage. Cars, shortage. Meat, shortage. High-end luxury watches designed to stunt on your peers, shortage. Luxury watch demand has skyrocketed over the last couple of years as sales for pre-owned watches topped $18 billion in 2019 and expect to reach $30 billion by 2025. The watch shortage has inspired mass amounts of startups to swoop in on the market and take advantage of the heightened demand. Rethink pre-owned watch collectors raised nearly $40 million last year with help from Tom Brady and John Mayer. Germany-based Chrono24 just raised $116 million from its investors. And Switzerland-based Coronex plans to raise $270 million in an IPO, valuing the company at $1 billion. So where exactly are all the OG watch companies while all this is going down? Rolex, Patek Philippe, Audemars Piguet, and Richard Mille are all sticking to their guns about limiting production despite the high demand to ensure their products stay real and valuable. Next up, it's our Pick Your Brain section, and let's talk about some cost of living adjustments. The Social Security cost of living adjustment for 2022 will be 5.9%. In 2021, the cost of living adjustment was just 1.3%. This will be the highest annual increase in about 40 years. The cost of living adjustment, or COLA, is an increase made to Social Security to counteract the effects of inflation. And in today's Mind Break, something to brag about? The governor of Colorado took to Twitter to brag about a rather random fact. He tweeted a graph indicating the locations of the most shark attacks in America. If you weren't aware, Colorado is not really close to the ocean. The governor said in the tweet, Colorado is tied for state with the least shark attacks. Okay then. Money Minds, we are nearing the end of today's business and financial newsletter, but here's just a few more things to keep in mind. The Federal Reserve said they would start to reduce the pace of its monthly purchases starting this mid-November. Another thing to keep in mind is that William Shatner partnered up with Jeff Bezos to fly 350,000 feet above the ground in a Blue Origin spacecraft. In addition, the Food and Drug Administration officially announced its first e-cigarette, the Vuse Solo, but its flavored tobacco pods were denied. And finally, Snapchat experienced a little pre-Halloween scare after it went down for a few hours yesterday. I guess it can join Facebook and Instagram in the doghouse. But that is it for today's business and financial news. Thank you so much for watching. If you like this video, don't forget to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.